Hello everyone, welcome back to another exercise tutorial from BUS 223 Financial Management course, and we are still working with Chapter 3 problems. In this particular video we're going to be looking at problem number 8. Now this is an interesting problem. It says Henry Jostick has just started his first accounting course and has prepared the following balance sheet and income statements for Omega Corporation. Unfortunately, although the data for the individual items are correct, he is very confused as to whether an item should go on the balance sheet or income statement and whether it is an asset or liability. Okay, so basically Henry had prepared these two statements, but they are all mixed up. There's a lot of mistakes in them. Help him by rearranging the items and filling in the blanks. So as you can see, we have some amounts missing, and we do have some accounts that are many accounts that are misplaced, right? So the first step or the first trick that I'm going to show you here is going to be highlighting. Okay, so what I'm going to do, I'm going to go over the balance sheet accounts and I'm going to highlight them in yellow if they should actually stay on the balance sheet, and we'll leave them blank for now if they are not supposed to be on the balance sheet. Okay, so let's read them one by one. First one, payables, which refers to accounts payable. Accounts payables, this is a balance sheet account, so we will highlight it. Accumulated depreciation, yes, this should also stay here. Total current assets, right. Long-term debt, okay. Property, plant, and equipment, okay. Net fixed assets, all right. Total assets, that's fine. Inventories, which is a form of current assets. Accounts receivables, also another form of current assets. So we will highlight it in yellow. Total current liabilities. Interest expense, no. We will leave that blank because this is not a balance sheet item. This is an income statement item. Okay, and then total liabilities. Shareholders' equity. Okay, total liabilities and shareholders' equity. All right. Okay, and then we'll change colors and go to the income statement and highlight the accounts that should be on the income statement, starting of course with the interest expense that we left blank earlier. Here, net sales, which is just another name for revenues, so yes, this is an income statement item. Cost of goods sold, selling, general and administrative expenses, okay. EBIT, that's right, earnings before interest and tax. Debt due for repayment, no. This we will highlight in yellow because this should go on the balance sheet. Okay, it refers to a form of current liabilities. Cash as well. Cash, of course, is a balance sheet item. Taxable income, yes, this will stay on the income statement. Taxes as well, depreciation, and net income. Okay, so that's the first thing I'm doing. I'm just highlighting. Okay, in the exam, if you don't have you have a highlighter, you might use like an abbreviation or something, and maybe use IS for income statement items, and maybe BS for balance sheet items, and just go over the accounts one by one, making sure that you put a denotation next to each account that shows you where it should go. Okay, and then the second step I'm doing, I will also put an abbreviation next to each account to show what form of a balance sheet item it is, to help me organize my balance sheet. Okay, so for example, if we go to the first one here, the payables account, it is a form of current liability, right? So I'm going to write CL, let me make my font a little bit smaller, CL to denote current liabilities. Accumulated depreciation, this is an assets contra account that should go in the fixed assets portion of our balance sheet. So we'll just write FA. Total current assets, of course, that will be in the current assets part. Long-term debt, it is a long-term debt, so that will be, let's say, a long LD maybe. And then property, plant, and equipment, this is another fixed assets. Net fixed assets, of course, in the fixed assets section. Okay. Not necessarily total assets. We don't have to write anything next to it. This is going to be the last line of our assets section on the balance sheet. Inventories is a current assets account. Receivables also a current assets. Total current liabilities, of course, they're going to be CL. Total liabilities, the last line of our liabilities section, we'll just leave it blank. Shareholders' equity, of course, it's going to be near the end of our liabilities and shareholders' equity section, so we'll leave it blank as well. So hopefully that should do it for now. So now let's move on and start creating our balance sheet. Okay. What was the name of the company? I think it was Omega or something. Let's see right here. Omega Corporation. So we'll write the company name. Omega Corp balance sheet. Okay. Now you have two ways of creating the balance sheet. You have the standard way and you have the, I like to call it the classroom way. Okay. Because even back when we used to learn accounting back in the days, we used to do this form where we have assets on the left side and then liabilities and shareholders' equity on the right side. But I prefer to go the standard way. So we'll start with the assets accounts. Okay. Starting from the current assets. So let's see how many current assets accounts we have. We have cash. Right here is the current assets. This is a current liability. We forgot those two accounts. So we'll start with the cash account, which had a balance of 15. Okay. And then we have accounts receivable. With a balance of 35. And then we also have inventories with a balance of 50. Okay. Now all of these together will give me the total current assets, right? Total current assets. $15.35, that's 50, and then another 50, that's 100. Okay. And then we continue on. Actually, let's delete this, or just make it smaller right here to make it proper. All right. Now for the fixed assets, we have how many accounts? We have property, plant, and equipment. We have the accumulated depreciation. Okay, two accounts. Property, plants, and equipment. With a balance of 520. Okay, less accumulated depreciation with a balance of 120. Okay, now adding these, or actually subtracting these from each other, we get net fixed assets or total fixed assets. $400. Okay. Now, knowing the total current assets and the total fixed assets, now we know the total assets. 400 plus 100, that is $500. Okay. Now we can move on to the second section, which is the liabilities and shareholders equity. Okay. We start with the current liabilities. We have one here, debt due for repayment. And we have accounts payable. Okay. Try to always start with the most liquid first. Okay. So probably accounts payable are more liquid, or would probably be due. Payables. Okay. With a balance of 35. And then debt due for repayment, 25. Okay. These two together will give us total current liabilities. Of 60. Okay. And then we'll check to see if we have any long-term debts. Right here, long-term debts. What was the balance? 350. Long-term debts. $350. Okay. Now we can calculate our total liabilities. $350 plus 60, that's $410. Okay, and then we'll report our shareholders equity of 90. Okay, and that will give us total liabilities and shareholders equity of 410 plus 90, that's $500, which should match our total assets. And as you can see, it does match our total assets. So hopefully that means we have done this correctly. Okay, I will add one extra page first. All right, and on that extra page we'll do Omega Corp income statement. Income statement. Okay, and for the income statement we'll start with the net sales figure right here. Net sales 700. Okay, and then we subtract cost of goods sold. Let's see if we have, let's locate our cost of goods sold account right here, 580. Okay, and then selling, general and administrative expenses, SG&A, $38. And finally, depreciation, 12. Okay, taking the net sales number and then deducting the cost of goods sold, SG&A expenses and depreciation will give us earnings before interest and tax, or EBIT. Let's run the numbers. 700 minus 580 minus 38 minus 12. And that would be 70. Okay. Now from the earnings before interest and tax, we need to deduct interest expense. Let's see how much was the interest expense. It was right here on the balance sheet, 25. And deducting the interest expense from the earnings before interest and tax will give us the taxable income. Okay, so 70 minus 25, that would be 45. Okay. Taxable income, then we will apply the tax rate on it if we have a tax rate. No, we actually have the actual amount that was paid off in taxes, and that is 15, so we'll take that and we deduct it from the taxable income. $15, and that will give us net income. 45 minus 15, that's 30. Okay. Now you can go back and check all of the amounts that was required here. It says what is the correct total for the following, and then they're giving you all of these different accounts. So we can go back now and answer these one by one. So what was the current assets? Total current assets, 100. Net fixed assets, right here, 400. Total assets, right here, 500. Current liabilities, total current liabilities right here, 60. Total liabilities, 410. And then total liabilities and shareholders' equity, 500. Equal to the total assets. And then earnings before interest and tax from the income statement, 70. Taxable income, it was earnings before interest and tax minus the interest expense, so it was 45 taxable income. And finally net income, which was 30. Okay, so this is how we can solve problem number 8. We corrected the balance sheet as follows. Okay, and then we also corrected the income statement as follows. And we, along the way, we completed all of the missing amounts, or the amounts that was missing from the provided data, and we recorded them right here to answer all of these or to respond to all of these requirements. All right, I hope that you found this video useful, even though it was relatively long. If you have any questions, please drop them down in the comments, and until I see you in the next exercise tutorial, keep on studying.